Yeah, the follow-up to this is, what do you think of the amount of capital currently chasing similar investments? Um, so, so yeah, I think that's probably one of the dynamics you have to deal with in this space. That it's a lot more focal than it used to be even 2 to 5 years ago, in the sense that thematically, if something's hot, everyone wants to cram into it. Take for example, um, big data analytics. So there's a couple of clear leaders in the space, like the Palantirs of the world, or the digital reasoning, etc. of the world. But quality attracts the most amount of capital, and I think everyone in the space is very, very smart, very attuned to what differentiates what is a potential leader in this space versus who's going to be a follower. Most of these spaces, are very large, so there's definitely room for a lot of competitors. But thinking back to thinking like an investor, funds like to invest in the company that's furthest along, has the most amount of revenue, possibly even EBITDA, to show for its efforts, closest to an exit in form of trade sale or IPO, which can sometimes make the process very competitive. You know, two years ago, coming into a round sizes, excuse me, first of all, were much smaller. I would say $40-50 million average for Series B, Series C, Series D rounds. And you could easily come in with 15 or 20 and be a leader. Now what you have is a number of crossover funds and larger funds raising capital to invest specifically into this space, and the size of the funds being raised is larger as well. So 5 years ago, a typical growth equity fund used to be a good fund size was 200 to 500 million, and now you wouldn't blink twice if you saw a fund with 2 billion of total committed capital. And as a result, that means that that sort of fund will not care about a $5 or $20 million investment. Table stakes for them are going to be around $75 to $100 million. And as a result, smaller funds are at a disadvantage there. And if there's a round in an extremely hot company, you will either get closed out completely, or you'll be cut down from whatever piece you're chasing. So if you go in for an investment for $20 million or so, you'll probably be cut down pretty significantly, especially if it's one of the companies that's expected to IPO soon, has a lot of buzz around it. And we've definitely seen that a couple of times as well. So the game is definitely changing. The size of investments has the size of rounds, and the result, the size of investments has definitely gone upwards. And I think that's going to continue to be the case until there is some sort of correction in the industry, which a lot of folks are anticipating, which makes it all the more competitive, actually, ironically, that the highest quality investments tend to have the most amount of capital, and then people are very, very cautious about investing in companies that might even have a single hair on them. So if anyone has an edge in terms of their own diligence or insider knowledge, when I say insider knowledge, I don't mean the bad side of sort of insider knowledge. I mean, having tried and tested a sort of a solution and seen what works and how it stacks up to competitors, that sort of thing can be very, very valuable. And that's a huge differentiator, because a lot of people out there, a lot of funds out there have raised a lot of capital, but they might not necessarily, but all they have backing them is large dollar amounts. So there's still opportunity for smaller players to be smart with their investments and still have a good return for for their LPs with smaller bite sizes.